Can you tell me what do you understand by the term overtrading?
When you sell more than needed, or when you
sell
produce
more than
needed.
Okay, when you sell more than needed. How do you know that you're selling more than needed?
When you're getting a loss, when
If
when
you're
you're
selling more than needed, you're getting a loss.
no, like when you're basically like when it gets to a point when you're not making profits anymore.
Okay, when it comes to a point where you're not making profits anymore. Okay, now look over here. I have a business. The sales every week is given over here.
Yeah.
You are also given the purchases every week, and you're given the expenses. Okay. In week 1, you're making profit. Week 2, you're making profit. Week 3, you're making profit, and your profit is increasing. What can you conclude about this business?
That their expenses is fixed.
Expenses are fixed. What else can you conclude?
Their sales increase,
Okay.
and the
If I
sales
talk
and
about the
profits increase.
profitability of the business, what can you conclude?
Profit increases.
Hmm?
It increases by
The
by more sales.
profitability, do
The
you
more
think
they
the
sell.
business is profitable? Yes?
Yeah.
Okay. But if I tell you that you have to pay for your purchases immediately, but you will receive payment for sales only after 4 weeks,
Yeah.
what will you conclude about this liquidity position?
It will be the business will be less liquidable because of it'll be hard for them because they will
They pay
receive
for
they will
purchases immediately.
yeah,
So
they'll pay
immediately
before
you're
they
going to
receive
pay
money.
1,000 in week 1.
Yeah.
In week 2, you're immediately going to pay 1,500.
Yeah.
In week 3, you are immediately going to pay 2,000. Then
Yeah.
2,500, 3,000. So you are going to do these expenses every week. Yes, but
Yeah.
you are going to receive payment for sales only after 4 weeks. That means the sales that you do over here, you will receive payment after 4 weeks. So 1, 2, 3, 4. So you will
Yeah.
receive payment of week 1 sales in week 5. Yes.
Yeah.
So can you say that up till week 4, you have to put in money continuously for purchases, for expenses, and you're continuously putting in money?
Yeah.
Yes. So what is your comment about his liquidity position?
It'll be poor.
It will be
Poor because they're paying immediately before they can receive money.
okay. They are paying immediately, and they are going to receive the money later. So although this business is profitable, you will not say that this business is liquid. Yes. So let's see. Let's comment on the liquidity position. How will you make the liquidity position? How will you get your net cash flow?
Sales minus purchase
You
minus
get your
expenses.
net cash flow as inflow
Yeah.
minus outflow.
Yeah.
So what is your inflow?
Inflow
In the week
is
1,
sales 2000.
are you going to receive money for this sales over here, or you're going to receive it later?
I'm going to receive money for sales later.
Later. So week 1 sales money, when are you going to receive?
Week 1 sales money will receive in week 5.
Okay, week 1 money you're going to receive in week 5. So here
Yeah.
you're not going to receive anything.
No.
Yes. For purchases,
Purchases will pay immediately. So 1000, 1500, and 2000, 2500.
expenses,
Expenses 600, 600, 600.
600.
Yeah.
600, six
Yeah.
hundred, 600, 600. So what is
Hmm.
his net cash flow in week 1? Is it positive or
1000
negative?
negative 1600.
For week 2,
Negative 2100.
for week 3,
Negative 2600.
for week 4,
Negative 3100.
for week 5.
Uh, Negative 1600.
Okay. So what will you comment on the liquidity position?
The liquidity is very poor of the business, and they
Okay.
won't have,
What else will you comment?
and this will trouble them to pay their suppliers.
Okay.
So this will ruin relationships with suppliers.
So you see, basically the firm is doing a lot of sales.
Yeah,
It is also earning a lot of profits,
yeah,
but it is paying immediately.
yeah,
This business is doing over trading. So
yeah.
at the first glance, it looks that this is a very
Uh,
profitable business that is
Mm,
expanding rapidly. Do you also feel
yeah,
that?
yeah.
Okay. However, when I did the further investigation, I got to know that I pay for purchases immediately,
Hmm.
but you had to give credit to your customers.
Hmm.
So you were receiving week 1 sales money in
Week
week
five.
5,
Yeah.
and week 2 sales money would be received further on.
Hmm.
So his cash flow is not very healthy. Do
Hmm.
you agree?
Yeah.
Okay. Assuming that sales continue to rise in the same way and
Yeah.
purchases also continue to rise at the same rate, it will be many weeks before the inflow matches the outflow.
Hmm.
Do you agree?
Yeah.
Okay. Also, if he still wants to continue his business after week 5,
Yeah.
he may have to arrange for these money.
Yeah.
Yes, he may have
Yeah.
to arrange a dollar 11,000 in the first 5 weeks.
Yeah.
If he does not get this dollar 11,000, that means his business will fail.
Yeah.
Okay, and if he continues to expand in this way, his business will fail further.
Yeah.
So, this expansion of business is going to make things worse,
Hmm.
and this is called overtrading.
Hmm.
So, overtrading, can you define what is overtrading?
Overtrading is when the expansion of the business makes things worse, and
When
they
the expansion of business makes things worse, and you would need a lot of cash to inflow to keep the business running.
running. Yeah.
This is the problem of what?
In overtrading.
Overtrading.
Hmm.
Okay, fine. Can you recall the 3 efficiency ratios?
The efficiency ratios. Mm,
Okay, I will
Current
give you
asset.
a small hint. I have the inventory turnover ratio.
Yeah.
Inventory turnover ratio in days.
Mm-hmm.
What is the formula?
Inventory turnover in days is uh average inventory divided by inventory divided by cost of sales
Into
into 365.
what does inventory turnover ratio tell you?
How long does it take for an asset to turn into sales?
Okay. Next efficiency ratio.
Trade receivable turnover is trade receivables divided by credit sales into 365. It
And the
shows how long does it take for the customer to pay.
next efficiency ratio.
Trade payables turnover as trade payables divided by credit purchases into 365. It shows
Okay.
how long does it take us to pay the supplier.
Okay. Do you remember anything about the working capital cycle?
Yeah, working capital cycle is inventory turnover plus trade receivable turnover minus trade payables turnover.
What does this tell you?
This tells you how long does it take to
This
get
the working capital cycle turnover ratio. What does it tell you?
It tells you how long does it take for the to get the money you paid back.
Okay, so it helps you to identify what, whether your business is in danger of overtrading or not.
Hmm.
Okay, so inventory
Yeah.
turnover ratio is basically, working capital cycle, the
Hmm.
day.
Hmm.
Turnover ratio is inventory turnover ratio in days
Hmm.
plus the trade receivable turnover ratio in days minus the
Yeah.
trade payable
Trade
turnover
payables
ratio.
turnover. Yeah.
Okay, I have two business over here, business
Hmm.
A and business B.
Hmm.
This is their inventory turnover ratio, trade receivable, trade payable, and the working capital cycle.
Yeah.
Analyze the risk of overtrading for business A and business B.
Okay. So 20, we'll do 20 working capital
Can you
cycle
tell
for
me which business is in the danger of overtrading?
uh overtrading business A,
Business A. Why?
because it's taking them more, because it's taking them more, like they're putting
So now you look over here. Business A is buying the inventory at the start of day
20.
one.
Yeah. Yeah.
It will take them 25 days to convert the inventory
In
into sales.
into sales. Yeah.
Then it will take them 60 days to collect money from the customers.
Hmm.
So the money that they will receive is they will receive the money in 85 days
Hmm.
on the 85th day.
Yeah.
They have to pay the suppliers on 45th day.
Hmm.
That means they have paying 40 days before they are receiving the money.
Yeah.
They will receive the money on which day?
You're gonna see the money on
The
the
85th day.
85th day, yeah.
They are paying the money on which day?
The 45th day.
That means they are paying the money 40 days before they are receiving.
Yeah.
That means business A is in the danger of overtrading.
Overtrading. Yeah.
It will have liquidity problems.
Hmm.
Now, when you talk about business B,
Business B isn't it won't doesn't risk
it
overtrading
buys the
because
inventory at day one.
yeah,
Then it takes
20 days to sell,
sell the inventory and
and it takes them 35 days to collect payment.
so money is received on the day
Yeah, 55th.
and you pay the supplier
Day 60.
on day 60.
Yeah.
That means you pay to your supplier
Yeah.
5
More.
days after receiving money.
Mm,
You receive the money on the day 55 and you pay your supplier on day 60.
yeah.
Yes, that
Yeah.
means you are paying your suppliers 5 days after you receive the money.
Mm,
So this is in a healthy position.
yeah.
Are you with me?
Yeah.
For the working capital cycle ratio, if you have a positive figure, means what?
If it's a positive figure, that means the business in danger of overtrading.
And if it is a negative figure,
Then the business is not in risk of overtrading,
it's
and the
a healthy
liquidity is
business.
yeah,
Okay,
and the
it's in a
liquidity is good.
healthy position. What
Yeah.
is your assumptions of the working capital cycle ratio?
Assumptions.
It treats trade receivable and trade
Yeah.
payable as completely independent items. You need to memorize it. What is the
Hmm.
assumptions of working capital cycle ratio?
It
It
treats the trade receivable turnover period and the trade payables turnover period as completely independent items.
okay. If customers are taking a longer time to pay, then this will harm the cash flow,
Yeah.
okay, which will result in not being able to pay suppliers on time. So
Hmm.
that means receiving the money and payment of money are dependent on each other. They cannot be treated as independent items.
Hmm.
Okay.
Okay.
So, and another thing is if the customers are paying quickly, then
Mm-hmm.
the business might have to incur an expense which is discount allowed.
Hmm.
The working capital cycle ratio does not take that into consideration.
Mm-hmm.
Are you with me?
Yeah.
Okay, fine. Now you have an activity over here. In this, you have to find out the working capital cycle ratio before the changes and the working capital cycle ratio after these changes are being implemented.
Hmm.
Come on, start doing it.
Mm,
You have to find the working capital cycle ratio over here.
Yeah.
That means you have to find the inventory turnover ratio, the
Yeah.
trade receivable turnover ratio, the
Yeah.
trade payable turnover ratio.
Mm-hmm.
This plus this minus this, you will get your working capital cycle period in days.
Yeah. Yeah.
Okay. After
Okay.
you find this, you will they are giving you certain changes.
Mm-hmm.
You have introduced certain measures to improve the management of the current assets
Yeah.
and current liabilities.
Mm-hmm.
And due to this, your these ratios are changing.
Mm-hmm.
You have to comment on how this is likely to affect the cash flow position.
Mm-hmm.
So first you find out before the changes your working capital cycle ratio.
Mm. Okay.
You have to comment on how this is likely to affect the cash flow position.
Is this saying 56? I got I got 56.3, so won't we change that to 57?
Hmm.
It's okay, yeah?
Yeah.
And for this I got 30 days. Trade
Sorry,
payable. Trade payable turnover I got 30 days.
33 divided by
410.
210
Yeah, into
into
365.
365.
Mm.
It is 29.3.
Yeah, so we'll make it to
So
30.
30 days.
Yeah.
So here you have increased 1 day. So here you can
Oh
reduce
wait, no,
by
miss,
1
miss,
day.
miss, miss, miss. They're saying to round all of your answers to the nearest day.
Where are they telling?
A.
Okay.
So it's 56 only.
Round all of your answers to the nearest day. So the
Yeah,
nearest day would be 56.
yeah, and 29.
Have you got it?
Hmm?
Did you
What
implement
happened?
the changes?
No, 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 I'm in A. Hmm. Can you show the question?
Have you calculated the working capital cycle in
No,
days?
no, 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 I'm doing. Can you show the question, miss?
Apachai.
Okay. Opening G. 66 plus 70. Mr. Get average inventory will do opening plus closing divided by 2, yeah.
Yes.
I get 68. And cost of sales will be 406.
But you
Miss,
don't have
whether
the opening, right? So you will just take the
we
closing.
have, huh?
Sorry.
We have opening and closing both.
Well, okay.
So it will use 66 plus 70 divided by 2. You get 68, not 180. How did they get 180?
66 plus 70
Yeah, divided by 2.
divided by 2. 68.
How did they get 180?
So inventory. Hmm.
We get 61 days. Then working capital cycle is 56 plus 61 minus 29. You get 80 days.
Okay. The inventory turnover ratio is to be reduced by 15 days.
Yeah.
So you will minus 15 days.
Yeah. So
You
61
will get
minus
this.
15. 61
The
minus 15, you
trade
get 46.
receivable turnover ratio reduced by 10 days.
Yeah.
Trade payable turnover ratio increased by 20 days.
Mm.
Get a new working capital cycle ratio. So
Yeah.
you got the new working capital cycle ratio.
Yeah.
Are you with me?
Yeah.
Comment how this is likely to affect the cash flow position.
The cash
See,
flow
over
position has
here
gotten.
also,
Yeah.
you are paying 88 days before than you're
Zli-
receiving the money.
Yeah.
Okay?
Mm.
And over here, 43 days before.
Mm.
So
So
these changes will improve the liquidity position,
yeah, but it'll still be bad. There'll
but
still
it will
be.
still be bad, and it is
Yeah.
very difficult to assess whether he is in a good position or not.
Yeah.
Are you with me?
Yeah.
So here you are receiving the money on what